Tired of the same old Chinese tech giant? Looking to diversify your portfolio beyond Alibaba, Tencent, and Baidu? If you believe in the long-term growth potential of the Chinese economy, then you need to hear about FUTU Stock. In this video, we'll dive deep into FUTU Stock, analyzing its recent performance, exploring the key drivers behind its growth, and evaluating its future prospects. So, if you are ready to explore the new and potentially lucrative investment opportunity, stick around. FUTU is a leading online brokerage and wealth management platform in Hong Kong and Singapore, empowering millions of investors to access global markets. With a focus on technology and innovation, FUTU offers a unique and exciting opportunity for investors seeking exposure to the dynamic Chinese market. In terms of performance, FUTU Stock has been doing very well. Last September, the stock doubles in less than 1 month, but since then they have lost some of its gains. But from the past year, the stock is up 56%, which is very good. In the last 5 years, still plenty of growth, but still far away from its all-time highs in 2021. In terms of fundamentals, this is the best part of FUTU. FUTU looks like an incredible company in terms of fundamentals. It is a company worth $11 billion and it's trading at the forward P of 13. When you compare to other Chinese companies, that looks a high P, but actually for the quality of this company, I do not believe so. They have been growing their revenues around 90% per year. They have gross margins of 93%, which is awesome, I would say. Their net margins are around 40%, the mean, but last year was even high, which is a company with really high margins. Their balance sheet is really great. They have $1.24 billion in cash and no long-term debt. So basically they have more than 10% of their market cap in cash. Their returns has been really great. Return on equity and on invested capital above 50%. And it's going up. 5-year return on invested capital has been around 10%, but last year was 15% and the trend is growing. They pay a small dividend and performance last year were very good. When you look into our money journey checklist, it's all check marks with a fundamental score of 90 out of 100. Revenue growth, it's a check mark, growing a lot. Margins, incredible. Net margins above 40%. Gross margins above 90%, so they basically have no cost, and I do really believe in the future with their active users continue to grow, their margins will grow up as well. They basically have no debt. Their returns are not the best, but bear in mind this is a financial company. They have not much to invest in. They have low capex, for example, so the returns on invested and on equity in financial companies usually are not so great, like when you compare to other companies. For a Chinese company, are pretty good, these returns. For me, they have a lot of competitive advantage. They have no competition in this area on Hong Kong and Singapore. They have been free cash flow positive in the last years, and they are returning capital to the shareholders. So basically, this is a company that have all we are looking for. When you look to their fundamentals, when you look to the graph of revenues and net income, the trend is higher, growing faster, but maybe we are seeing a plateau in the next few months. It's gonna be difficult to grow around 90%, but we might see double digits, which is pretty good. The net income is growing along with the revenue, which is good. Gross margins are growing, so this is a kind of moat, in my opinion. As their active users, their clients increase, their cost stays the same, or they basically have their fixed costs will not increase at the same as their active use, and their margins will expand. So this is what we are seeing. With that, with revenues growing and profits growing, their returns will grow. Returns on invested capital will grow. With that is what we are seeing as well. Shares outstanding. Bear in mind, this is a a new young company and they were diluting the shareholders, but since 2021 they have been buying back shares at a good pace. 2022 they bought back 5.6% of the company, 2023 2.7%, and this year only 0.1%, but it's this fiscal year and it's still in the beginning, so I do believe they will continue to return capital to the shareholder, doing plenty of buybacks at a cheap valuation. So, but in terms of valuation, is this a company that is really cheap? Let's look into it. For me, since it's a Chinese company, the risk of this company, it's very good company, really great fundamentals with a great future ahead. So for me, there are not much risk in terms of company. I would put a medium risk, but since it's a Chinese company, there are plenty of risks to invest on China. So for me, my base case discount rate will be around 13.4%. So in terms of assumptions, last year's net margins were 47%, but the last 3 years has been between 40% to 42%. So what should be the margins, net income margins or free cash flow margins in the next 10 years? So for me, it will be around 45. If you want to be even more conservative, it could be 40%, but I will use 45% because I do really believe with gross margins above 90%, I do really believe this will be a high margins business. In terms of growth, I choose to be conservative in terms of growth. They are expected to grow 47% this year. Bear in mind that have been exploding and a lot of Chinese investors starting to invest again in the stock market. Has been really difficult, but macro wise, I do really believe Chinese will recover, consumer sentiment will recover, and Chinese people are afraid to invest because of their real estate crisis that they have. They lost plenty of their wealth in the real estate, so now they are afraid to invest, and Chinese people tend to be very conservative in terms of investment. But we are rock bottom in my opinion, so it will be only going better, but by how much, that's the question. For me, they are expected to grow this year 47%, and for 2025 fiscal year, that will be next year, they are expected to grow around 15%. So for my growth rate expectation, I'm expecting them to grow 12% after that and 8% for the last 5 years in my 10-year discounted cash flow. Since this is a company with really great margin and really good growth, I have to pay a premium. I'm willing to do a 22p for this company. For me, it's a better business than Alibaba, than Baidu, for example. So I'm willing to pay a higher premium, like 22 for my base case. In terms of discount rate, we already have some margin of safety in this discount rate. I'm assuming 13.4% discount rate, which has some margins of safety. Then I will do my bull case and bear case, and which is a more optimistic and a more not so optimistic case. And with that, I came with an intrinsic value of $101 at this moment. So right now it's showing at $80. So there are plenty of margin of safety, especially for a company with this quality, in my opinion. I full disclosure, I do own this company. I discovered it in August, and I started buying aggressively right there when the stock was around under $60, around 55, around that. But unfortunately, in the next weeks, we see an explosion of the stock price. It was a double in less than 1 month, and then since that we are losing some gain, but still we have a good gain on that. But unfortunately, the stock price increased really fast, and I didn't have time to increase my position as I would like. But if the company continues to go down, I might increase my position, but right now it's a small position of my portfolio. So, in conclusion, FUTU Stock presents an intriguing investment opportunity for those seeking diversification within the dynamic Chinese market. While challenges remain, the company's strong fundamentals, innovative technology, and growing user base position it for a potential long-term growth. However, it's crucial to conduct thorough research and consider your own risk tolerance before making any investment decision. As always, this video is for informational purpose only and does not constitute financial advice. Thank you for watching. Please like, subscribe and leave a comment below with your thoughts on FUTU Stocks.